Hello. Alright, in this video I will go through how I anticipate market movements based on the theory of time and price. These concepts originate from ICT along with my own discoveries and adaptations along the way. Understanding these things I'm about to show you allows you to play the fortune teller and predict the future, at least with a relatively high degree of accuracy should you master it. But in all seriousness, what I want you to take away from this video is that you can time the markets and use that to your advantage in confirming your bias and narrative, therefore increasing the probabilities of your trades panning out and allowing you to catch more pips with more confidence. So why is this superior to other retail concepts out there that use things like indicators? Almost all of them are lagging signals, right? So meaning that the information provided by them is based on the past and not indicative of what price is going to do in the future. So without further ado, let's get into the video, and at the end of it I'll show you a real current example of what I'm anticipating on EURUSD and how I formulated that analysis. In order to put all of this together, you'll need to have at least a basic understanding of the following concepts: price and time. I'll briefly explain them and then move on from there. If you don't understand some of them well enough, go on YouTube. There are many videos on it from other creators as well. Or you can contact me, leave a comment, and I'll be glad to explain. For price, there's 4 aspects that I've noted down. And for time, also 4 aspects. It's important when framing your bias, narrative, and trade is to understand the draw on liquidity. Price is drawn to areas of liquidity, either to reverse or to eventually continue in that direction, right? Because it's the lifeblood of the market. Liquidity is needed to move from point A to point B, and it is required by smart money in order to get in and out of their positions, or else they won't be able to do that effectively, right? So that's the first concept. The second concept is PO3, power of 3, which is basically ICT's concept of price accumulating, price manipulating, and then price distributing. In a bullish scenario, price accumulates, it manipulates by sucking in traders short, and then it goes the other direction, and then it distributes, right? So a power of 3 may look something like that in a candle. It's basically the expectation of price accumulating, manipulating traders in the wrong side of the market, building liquidity that way, taking that liquidity, and then moving in the other direction. Point 3, you have the PD array matrix. So you've heard of PD arrays from ICT as well. If not, yes, you got to go check it out and study it either on his YouTube channel or from any other content creator on YouTube or online. So the PD array matrix, you have your order blocks, fair value gaps, all highs, all lows. You need a basic understanding of price moving from one PD array to the other and doing this throughout all the different time frames, right? Point 4, fractals, that's also connected to the PD array. Basically, fractals are, what you see on a higher time frame, you're going to see the same on a lower time frame, right? So if you see this pattern on a higher time frame, such as the daily chart, you could just as well see this on the 4-hour chart, the 1 hour, the 5 minute, the 1 minute, the 5-second chart. Price is fractal, and it's always doing the same thing on multiple time frames, and this kind of ties in all together. So understanding how all the time frames fit together is important as well. Okay. Next, we have the concept of time. So number 1, we have seasonal tendency. Seasonal tendencies are what certain markets or assets are likely to do at different times of the year, right? So from March, usually the dollar tends to decline, and all the way through May, where it tends to gain strength again. So while you don't use this as your only bias to take a trade, time is used to add that additional confirmation and probability to your analysis. Next, we have high impact news. So if you go on websites like Forex Factory, their calendar, you can use that as well to build your narrative, your trade ideas. High impact news is an injection of volatility in the market. Many traders are watching this, and for one, it can be used to manipulate a lot of traders into getting into the wrong side of the market. Number 3, we have weekly profiles, which is something you have to study from ICT's videos. I believe he has it uploaded online. It's from his 2016 private mentorship. I can't remember which month, but you can check it out. Number 4, we got kill zones, also very popular. It's basically certain windows of the day, session timings that have more volatility as well, more liquidity coming into the market, and oftentimes used by the interbank algorithm to do certain things. So you can have certain expectations in that as well. So once you have an understanding, at least a decent understanding of these things, you can start to build a narrative. So I'll go into the chart and I'll show you how I've come to my current analysis on EURUSD. So the first thing I'll do is I'll do my top-down analysis from the highest time frame down to the daily. My hourly charts are used to refine my POIs for potential reversals or continuations, but basically my trades are framed on minimum on the daily. Okay, so I start from the yearly chart, which is the 12-month chart. So the first thing I've noticed price getting a reaction from is this yearly fair value gap. This one down here as well. Price comes all the way to this one, so I've noted this one and the yearly buy side balance, sell side inefficiency gap here. So we've got a CB up here and a BISI up here. So we see that price came down to this area, created some equal lows, which are a form of liquidity. Here, here. Price comes up, comes to the inefficiency, comes to internal liquidity, internal range liquidity, into a premium, and then displaces down, one more time back up, consequent encroachment of this wick, and then expands down into this CB here, this BISI here. We get a reaction in 2022. Closes above the halfway point. 2023, not too much of a range. On the yearly chart, it is 700-800 pips, but on the grand scheme of the yearly chart, the range is a bit of small. And now we are in 2024. So we have to go down to the lower time frames to look for more information. So next I will go down to the 6 month. And we can see what happened on the yearly still. So big bullish candle and then displacement down, disrespecting the BISI created here. And so what I've noted down is the PD array that is important to me on this time frame, which is the 6 month. We get a 6 month displacement down with a gap. It goes into the yearly, it creates the gap, goes into the yearly gap, and then back up into the 6 month gap. And now it seems it does not want to go higher than that. We have a nested PD array here, somewhat of a body breaker, which is good. So let's go down to the lower time frames. I think we'll go straight down to the monthly. So this is the 6 month here. This is the yearly down here. This over here was we'll see on the weekly, but it was a large weekly opening gap. Price comes all the way up to the tip of it and then displaces down, comes back up again, and then now we're here, right? So I have some targets here, which I'll show you in a second. I'll just show you now. I see some bodies that are creating equal lows, and I find that that is also a form of liquidity as well in price. Usually would want to go back to these areas. Although you see the wick spiking here and there, the bodies are quite low, and if you go on the 2 month, they're equal. Every 2 month has price closed and open on almost exactly the same area. On the 6 month as well, you can see some relative equal lows created over here as well. So I believe price will be drawn down to this area and this large wick here, midpoint of the wick. consequent encroachment will be right there, and I think price may be drawn back there, and I believe lower as well. So we'll go down to the monthly, see what's happening. We don't frame trades on too high of a time frame, but we build our bias, build our narrative. So in monthly, we see here price kind of consolidating. Price came down to this busy balanced price range here. Close here, spiked up, close a bit lower, and in April spiked up again, and now it looks like it may close lower, right? And that is my expectation. So what am I expecting? On the monthly, price came back down to its busy, so it was already used, so there's no point using it again. And there's no other PD array here, so I'm expecting a swing low to be taken. And what I'm expecting now is this fair value gap to be used as an inversion fair value gap. Okay, so that's the first thing I'm looking for. And based on time, I want this candle to close below this fair value gap decently in order to be used as resistance. So we have about 2 days left in April. So 2 days left for the candle to close. So I'm expecting price to close below, and perhaps a bit of manipulation on the lower time frames before a displacement down. So price may come up again before closing down. So let's go on the lower time frame. Go straight down to the weekly, right? Okay. I use the lower time frames to, refine my POIs and refine my narrative as well. So let's see what has happened. I kept this CB 1 week, which happened a long time ago because it was respected so many times as resistance support, and here it's finally used as resistance one last time. We have one up here that got used again. And we have a 3-week gap here. I'll just go to the 3-week quickly. 1 day gap here, which this is an R2F gap, my signature gap, which is quite a high probability of getting a reaction. And even without a bias, it works most of the time. But for me, I prefer to have a bias. So you see the weekly close way down below this monthly gap. And we see it trade into this busy 3-week, and now it's going higher, right? So we have this 1 week CB created here, and we have this 1 week order block created here. Okay, and our first target is sell side liquidity, and of course wanting the month to close below this 1 week, this monthly gap, right? So I have 2 days to anticipate price doing something like that and closing the month below, right? So I'm anticipating some measure of high impact news to do a bit of manipulation, and then finally displace down, trapping traders who are trying to go long, thinking they found a bottom. So we go on the daily time frame. And I'll go down to the hourly later just to show you the type of manipulation that's been going on. We have a CB here, a daily CB, price trades into it, comes down, comes back down to a PD array, consolidates, expands, uses it as support, expands higher, comes back down into my R2F gap down here, and now it's expanding higher again. Let's go down to the 4 hour. We see a lot of manipulation that has happened. I'll go down to the hour as well. So we see price expanding, it's dropping, expanding again, and then we had a news event, drops fast, creates its equal lows, comes up, takes out buy side, and then expands all the way down. And I think a lot of people at this point would be thinking, okay, buy side liquidity was taken, I guess above these highs. Perhaps it's time to go lower, but I think we still have one more manipulation, which I'm anticipating, and price coming up to fill in this void up here. So currently, based on my experience, maybe into this area, the 62% of the range, the 62% of the fib, possibly up here. And I think my terminus would be into this weekly opening gap up here, right? If you go on the weekly, there was a weekly gap. It got traded too many times, but I'm leaving it on there at the moment until price leaves it. Then I'll remove it because it's inside the gap as well. So let me go down to the hourly. Yeah, and we have a breaker here. So price may come into this area as well. So at this point, I want to look for a sell. I don't want to look for a long at the moment, unless it's a scalp, unless it looks really good. But I'm waiting for a short to potentially take us a lot lower below these lows and into this. There's a 3-week gap here that would be nice, and who knows, potentially even lower, although that would be very bad for the euro. So, okay, let's have a look. So when considering these things, anything can happen. A bullish scenario could be created, a bearish scenario could be created. You can't be right all the time. All you can do is build your narrative, and you have your bullish arguments and your bearish arguments, and then you see which one's stronger. And if you're not sure, then it's best just to do nothing and sit on your hands, right? So I have my bearish argument, which is with a higher time frame premium array was already reached, as you've seen on all the time frames. By the way, this line here was the yearly bearish breaker, but the body, right? So if we go to the yearly, see the breaker body here, and we see this spike up into it. That's this over here coming into the yearly breaker body, and then price displacing lower. Okay, so just for reference. So that's how I built my bearish bias. So first thing, the higher time frame premium arrays were reached. So I'm expecting more discount arrays to be reached, such as this equal lows, this some relative equal lows here, and this one back down into this monthly BC here, and I think there's also some 2-week, 3-week BCs down there. There's a 3-week gap here, showing on the week. So that's the first part, and I see that distribution has occurred up here. Price returning this area and then redistributing again. So that's number 2. I see bullish PD arrays disrespected, just here, bullish fair value gap, respected once and then disrespected. Here it's being here's been respected, and now I'm waiting for it to be disrespected. So there's 2 areas right now actually where I've been thinking of taking a trade. One is up here, and if I can't catch anything in a retracement, I'll definitely be catching one down here into the monthly gap next month to take lower. Okay, and if there's fast displacements, London is usually a good time as well to take these continuation trades. Just for your notes. Okay, so that's my bearish argument, right? The small bearish PD array is created, and lastly, it's also bullish for the dollar starting in May. So that's great, things lining up, and I'm just waiting for one more manipulation. For bullish arguments, I don't see too much. There's no more PD arrays that should be traded to unless it's time to make even higher highs, potentially coming up to this buy side liquidity, and yeah, it's basically just moving higher from here, right? This is my range here, premium and discount. So we already reached premium. We had a reaction here. I'm expecting one more just to come in, fill in this inefficiencies here, and a breaker over here, which should be very nice. All right, so which part of this is forecasting the future, timing the market? One, it's mainly right now, it's the anticipation of this monthly candle to close below here, right? So I see no point of it closing here unless it created another gap here. From experience, I don't see happening, but I mean, it is possible. But I do have the anticipation of it closing lower, right? So I see a quick displacement down. I see things like distribution, manipulation, and I see news doing what I want it to do. Then I'm more inclined to feel like I'm on the right side of the market and my analysis is going to pan out. Yeah, so I may take a trade up here. The highest probability trade for me is the monthly closing below this monthly gap here, and then taking a trade as it enters back into there. But I'll see what happens, right? Because there's all there's this big gap that I believe price will come back up to there. So it depends when. Does it come back up now, or does it come back up later? Because 1 month is a long time, and you know the wicks can always paint outside of the lines, right? So for example, you know, we see a small gap here, a monthly gap, and we see the wicks. We see the body is not close above it, but we see the wicks spike multiple times through it. So the wicks can always paint outside of the lines. So what could happen is the next monthly candle could wick up here, here. I could wick up anywhere, right? And then, you know, expand lower and have and not close above its high, right? Or open. So that's something to consider. If price just closes, if price just continues down, and then closes the month, I could expect the next month to dig into here. But currently what I'm expecting and what I feel is going to happen is price potentially just coming higher. Got some chopping up traders on the way up. There's some high impact news for the euro and the US dollar today and tomorrow. Nothing too crazy, not CPI or PPI, but I think we could see some manipulation take place, and who knows what could happen, right? It could be a real world news that comes out on BBC or CNN. You know, someone drops a bomb and price just does its thing, which it tends to do. All right, I hope you found that video insightful, that it helps enhance your trading. If you need clarification about the content, or you're still struggling to, you know, find yourself as a trader and need some personal guidance or mentorship, feel free to reach out to me, and I'll see how I can help you. Till next time, happy trading.